Fitch reaffirms the U.S.'s AAA credit rating at least until 2013, but S&P may revise France's outlook to negative. Eurozone finance ministers meet in Brussels to try and beef up the leverage fund as U.S. stocks try to hold on to their massive gains. I'm Alix Steel, and the Morning Call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alix Steel with The Street, and together we bring you the Morning Call. Scott, stocks had a crazy day on Monday. S&P up almost 3%, which was very close to being the best Monday after Thanksgiving since 1941. Was this a positive rally that we're seeing it build on today, or was it upsetting for traders?
What's funny is everyone thought it was such a crazy day after the worst week
Right.
since what? You said
1932.
So the best day since that time period. So with that type of action or headlines, you would think there'd be more to do. But yesterday, there was almost nothing to do. The market opened up, just say 35 handles on the S&P, and then it stayed there in a tight range for the majority of the day, and then it pulled in. So any traders that weren't long over the weekend, because it was hard to be long over the weekend, then finally got confident or comfortable, then it pulled in about a third of the day, and then the last 15 minutes closed strong. And then now we get a bit of a gap up and some follow through.
So is this actually day two of a rally, or does it have actual follow through now? Because you have conviction yet?
I don't see any follow through to the overall macro rally. On a micro level, we were down 7 days in a row, almost 10% since the Wednesday when we broke the wedge to the downside. So it's nice to see that we can get more than just one day, that we can actually work off the oversold condition for a few days. So it gives traders a few more things to do and maybe give investors a few more individual stocks to look at.
But are we coming up against some heavy resistance that we need to sort of be keyed into?
Well, that's what's really important here is because the rubber band was so pulled down, you do have some room for it to bounce back up, but there is so much resistance overhead in all of these sectors. That's going to be very hard for the market to get any real traction. So if we take a quick look at the chart of the spiders, I'll show you the resistance 2 level that I was talking about yesterday. So here's the spiders. All right, you had a big gap up yesterday, which was nice that it held the gap up. It closed near the upper end of the range, but with not much authority. And I was hoping that we'd open up around flat so we could trade through this just a 120.30 area for a partial gap fill. But because we're opening around the 50-day, where we're opening near the closing of this gap, I think that's going to be a big area that people are going to sell into. So if they bought on Wednesday, Friday, and had the confidence to do that, which was hard, they would be selling in here. And yes, as a trader like me, I positioned into the dip yesterday. I'll probably be taking trades into this area because I still think this market has way more to prove, and I think it's still a dangerous place to be.
And real quick, if you're a long-term investor, what do you do now that we're sort of in this band that we're trying to fill here, this gap?
I still think that if you're in macro 1 and you didn't sell when we broke that wedge to the downside through 1245, continue to sit. Do not add to position. Stay in macro 1. I think that if you were really uncomfortable, last week, maybe sell some in-the-money calls and just get a bit more comfortable, because there's no reason not to be comfortable right now with all these headlines.
And comfortable. Want to go to retail to see how it held up yesterday, so we know the stats, right? We had, online sales for Cyber Monday up 18%. We had Black Friday sales up almost 6%. Online stores on Black Friday up 24%, and people actually spent about 8% more than last year. Let's check the strength of the retail sector, RTH, to see if it was able to hold on to that bounce from yesterday.
It held on to the bounce, but there was no real power. It didn't close in the highs. You didn't see super volume. Based on the headlines, it should have been like a rock star day, but it was okay. And the group continues to show relative strength. So if you take a look here at the chart of the RTHs, you will see that it's still holding higher. It held important support. It did gap up, cleared this little 4-day range. But closed with more of a thud than a crazy power.
Isn't that kind of a negative sign, though, considering it was like the sector to talk about in the sexy sector yesterday?
A little bit. And I had like a little joke on my radio saying the reason why retail's so good because everything's so bad. It was almost like comfort food. If you're not happy with your life, you go out and buy something to make yourself feel good. But anyway, hopefully it's not that last hurrah. But people have been saying that for a while. But as of now, technically it still looks okay. But if you look back here at the chart, just like you talked about the resistance, Alex, here we go. Resistance right here. And even if it gets through this, you have a bigger resistance around 111, 112. So overall, as far as all the groups, it's the closest to getting back to the old highs. But still, look at this level up in here. It's going to take a brick wall to get through that.
All right, so then let's go to the winners here. Let's go to the ones that actually did hold up really well. You were saying Nike, Under Armour, Deckers, which really goes along with the strategist I spoke to from Global Hunter Securities that said footwear, activewear is a really strong theme for 2012 retail.
Yeah, and I spend a lot on my shoes also. And you have to, if you're going to be outside, you're going to run, you're going to do all these things, you need to be comfortable. And Nike yesterday, I looked at the chart, guys who went with it, they got rewarded. And investors who are staying this course are still pretty happy here, considering, look at this nice move. Nike is one of the few that are really close to the high. Yesterday it had a powerful move. It broke above this mini little channel here, closed well, and look how close it is to those highs. So if you're an investor in Nike, you're getting rewarded. If you bought it yesterday, you had a nice day, and this is in the game for new highs, and this is one of those macro positions, investment quality, that I think if you have to be in the market holding long term, this is acting well.
So maybe as a long-term investor you can add, and as a trader you can add for momentum.
Yes.
All right, so let's go to kind of the mid-tier. Want to look at discount stores. National Retail Federation said that 37.5% of shoppers visited discount stores over the weekend compared to about 40% last year, which was very interesting. So how does that shape up for like a Walmart and a TJ Maxx?
I think Walmart and TJ Maxx are holding up well, and this kind of makes sense. In an economy that's just standing still or not doing well, you would think that people would want bargains, and Walmart has everything. My wife even goes to Walmart.
I'm a TJ Maxx girl, but there you go.
She goes there too. So she goes to both. So if you look here in the charts, you'll see technically this was the spot I would have liked you to buy Walmart around 53. Overall, it's still above the moving average. It's still acting well. I wouldn't say go out and just add to your positions in Walmart, but if you're long Walmart, stay with it. If you have a shorter term time horizon, if it does break below 56.32, I think technically it would get a bit weaker. But I do think Walmart looks good. And real quickly, TJ Maxx, TJX, look at that too. Slow and steady, above the moving averages. It wasn't a blockbuster day yesterday, but this, the stock's close to new highs. And if people want to still, have a budget and want nice clothes and not go out and spend, an arm and a leg, these stores seem like they provide that kind of access.
Now, what about department stores? Because the National Retail Federation also said that almost 49% of shoppers paid a visit to department stores this weekend versus 52% last year. So that brings me to like the Macy's, the mid to low end, right? And then you have the high end, the Nordstroms.
So Macy's also looks a little bit like a Walmart, where it's hanging around. You had a nice trade above this 28, controlled pull-in, still really close to these highs. Still some value here in Macy's. I think people feel comfortable. Also, JCPenney's I think is acting okay, not great. Actually, looks a little worse than Macy's. So maybe people like Macy's over JCPenney's. And what was the last one?
Nordstrom's, so we're the high end, JWN.
JWN. Are they spending the high end money? Doesn't look as strong. Look how it came all the way down, where these other ones that I just showed you kind of held this level, and this one came all the way back down to the same support that most other things are holding. So I don't see any relative strength in the higher end right now. And
then speaking of the higher end, we had Tiffany's coming out before the bell this morning. Killer quarter, but revenue guidance for 2004 was light. 2012 guidance not so great. They do have the potential for really good operating margins because they raised costs when input costs were higher and haven't lowered them now that input costs are lower. What's the stock doing?
I think it's down like 3-4%. When I came in here, I looked at it. So it'll be interesting to see if it gets a pass. That it wasn't horrible numbers, but it wasn't one of those type of numbers like that wowed you. So I guess we'll see what kind of environment we're trading in right now. As of now, it's been holding up better above the moving averages, but it's back around the 70. I would say if you're looking for a long, maybe trade it long versus this like 68, 66 area. But if it weren't, if it doesn't hold this, I think this group might get more pressure, and it would technically change.
I just wanted to wrap it up with Lululemon, kind of the specialty high-end sort of footwear, activewear there. So Janney Capital Markets expects a more conservative Q4 guidance when they report earnings on Thursday. Also noting that Black Friday, there were the highest level of clearance and markdown products that was brought to the front of the store since they have seen this quarter, which means they're really going to be discounting and really hurting those margins. I wonder if the stock's also not showing any juice.
I think you have to be very careful when it comes to this stock now, because just like you saw in some high beta tech that lost momentum, whether it was Netflix, GMCR, SINA, like we trade momentum stocks, and when momentum leaves, you have to be aware. And LULU was a name that all my traders talked about. Every time the market was weak to go strong, like, oh, let's look at LULU, and it was really bouncy. Now it's not as bouncy, so I don't know if that's a sign of the future that it's starting to weaken. So look here at the chart. I'm not saying it's game over, but look when it broke the wedge to the downside. It's back at the lower end of the range, so it's holding on by a thread, closed in the middle of its range, so maybe people are nervous about those numbers. But I would say if you're in it, be light or be hedged, but as a momentum trade, there's not much momentum there anymore. All
right, and keep in mind for retail, there is a whole extra day of shopping this year between Thanksgiving and Christmas, which means one whole extra Saturday, so there could be more juice for these guys. So we'll be right back, though, with some high beta tech, including Apple and Google, right after this.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
And we're back with high beta tech. Go to Apple, kind of a retailer, kind of high beta tech here, up 3.5% on Monday. Is it enough to shake it out of a doldrums it's been in?
I still think it's in the doldrums as a trade. It was good yesterday, maybe get some follow through today, but it still has a lot to prove. If you look here at the chart, you will see that ever since it broke this box pattern, it's been under pressure and making lower high, lower high. Question is, will this be another lower high? Yesterday got long above 376. It's going to have massive resistance around 382 to 383. I think that's the spot to sell some if you're only in it short term.
Talking about a massive resistance, let's go to Amazon. You know, up over 6% yesterday on that Cyber Monday afterglow. But is it enough juice here? Are we going to hit some resistance?
It's been in the penalty box since the earnings. If you look here, it was a good trade yesterday. Still has some room. You know, it's trying to get into this gap. You know, some indices are starting to fill the gap, so maybe why not Amazon when they're reporting such blockbuster historic sales. But, you know, it gets into this gap right here. You're at 197. I would probably be a seller. I'm holding it overnight. And then maybe even look to short it around 200 to 204 if it can get there.
And how about Google? Same kind of story, up almost 5% yesterday?
Google has been a great momentum trade. It held up as long as possible, and then when the market broke, it broke. But yesterday it was up 24 points.
Right.
So for a macro trade or an investment, I still think you could hold it. As an active investor, I think, or as a trader like myself, you take a quick look at Google. It has room to fill the gap, but I think that you should be a seller in front of this 600 / maybe 596. This was a nice size move.
Also good level to short there, or too risky?
Yeah, some will try if they can have the risk tolerance for that.
All right, let's go to BIDU, up almost 6% yesterday, but it just really struggles. I wonder if this is actually the good short in high beta tech.
It might be because all of the Chinese internets are coming under pressure. Yesterday, SINA was actually a good trade for traders because it showed relative weakness, and then some guys got short based on that. Then the Muddy Waters article came out and it fell through 60. But overall, you know, it's a dangerous spot to be in. If you look at BIDU, it's the class of the entire sector. It's still in the game. I guess you could trade it long versus 120, but it's going to have a massive amount of resistance into this 130 area, and I doubt that it could even see this 135.
So would you be shorting here?
I would say up in the 130 to 133, I would look to get short.
All right, let's round this out with IBM, up only 3% yesterday. But, you know, if stocks wind up holding up, isn't this going to be one that could participate in the Santa Claus rally? You know, sexy, high, you know, blue chip, IBM kind of name?
It's got the formula. It's got Warren Buffett behind it. Let's hope that he didn't, you know, buy too much and has a little left, you know, underneath the pillow. But as far as IBM's concerned, you know, tried to break out. You know, nothing is breaking out in this market, especially a behemoth like IBM. You know, it did close decent yesterday. It has a lot of resistance coming into this 185, just like everything else. You know, so it's got a new range to trade against. As an investor, you could hold it. As a trader, doesn't look so sexy here.
All right, let's go to some quick ways to maybe make some cash today. Want to hit on Agnico Eagle, made new 52-week lows yesterday. Now, this is because of a shareholder class action lawsuit was filed saying that the company didn't disclose information about its Goldex mine, which it wound up closing, and it was running into a lot of difficulties. So at some point, you have to wonder, you know, at some point, this company does have a really good growth story down the road. So when does it become too cheap to ignore, or can you not even touch it at this point?
At this point, it's so dangerous on the dead lows. It never rallied with the rest of the miners. It told you that there are problems there. I think wait for more clarity, wait for a reversal pattern. At this point, if you take a quick look at the chart, you will see that it's one of the first ones heading towards the lows. I think some might even short it if it breaks below 40.39 for a move into the 30s.
All right, on the flip side, though, Randgold was down 7% yesterday. That's on lowering production guidance for the second time in 2011. Was it horrible? Was that sell-off as horrible as we were thinking it might be?
It did come a little off the lows, and for those that missed their selling opportunity up at 115, because we talked about that, you know, once these momentum stocks lose their upper ranges, where it did right here, this was your sell. So if you held it, you know, this was your area to maybe look to get long. You know, I know you like the story here longer term.
I do.
You did say let's get rid of it around 115 with me. At this point, maybe a nibble versus yesterday's low. That's around 95.75, and with a bit of time, it could fill this gap back to 104. All right,
let's go to Caterpillar here. Is this stock finally ready to show some juice and break out?
This is one of those institutional favorites. It had a decent day yesterday. It has a bit more room. I would just not be overly excited to get into tier 2 or tier 3. Stay tier 1 if you're a macro investor. You know, if you're a trader, perhaps if you take a quick look here, it has some room to 95, but you know, not much juice there.
And how about Las Vegas Sands? Was yesterday kind of a one-day wonder kind of thing?
I think it's still in this channel. It's so streaky. You have to sell it when it looks its best, buy it when it looks its worst. At this point, it's in the middle of this noise. You know, if you look at this channel here, I guess it has some room back to 46. But in order for it to break this descending channel, to the upside. This market's going to have to be in a much better environment, and right now I don't see that yet.
Now what about Goldman Sachs and Bank of America? I was speaking with Stephanie Link, Director of Research for The Street yesterday, and she was taking that advantage, that big rally yesterday, to sell some Bank of America, to finally get rid of those shares. Do you think we're going to see some of that today?
I think Bank of America has a huge level between 5 and 5.13. If Bank of America starts to break below 5.13 and even $5, you're going to see some fear come to the forefront. You're going to see some pressure on the group. You're going to see people all over TV talking about it, and that might be troublesome for the market.
And rounding it out, I wanted to touch on gold to see what you would be doing after this big move Monday, up $30, up slightly today, about $4 before we started the show. I'm hearing that it was a lot of short covering yesterday, triggered by reaching and breaching that $1,700 level. Also, if you look at the latest Commitment of Traders report, it also showed a lot of short covering last week. Is this an interesting level, or does it need to kind of hold the 720, 710 level for a while?
I think it's like a no trade. If you're an investor and you're in it for the long term, you just withstood a pretty big pullback. Just hold it tier 1 as a trade. You know, it's very gappy. It doesn't give you much intraday action. It did gap above. Look, it gapped above this mini pivot, which would have been a good trade, and then it really did nothing. It just stood there. So what kind of trading did you have if you weren't in it overnight? So there is some room back to, I would say, this 169 area, or 168, 169, but then that's going to be a lot of resistance also. But if you're in it for a scalp, I would take it there. You know, overall, if you want to trade a long, trade it versus this minor support here.
But it does look like the uptrend is still intact, though.
Yeah, let's take a longer term look right here, because I know you love gold.
I do, I know, I'm sorry.
But if you look here, it's still intact.
Right.
Look at this uptrend that's been intact since that July. Still intact, still moving higher, so it's okay. You do have a high and a lower high, but you still have all these higher lows in place, so just make sure it doesn't make a lower high around 170 and then breach this 160 area, because then next year it might be some rough sledding to start off the bat.
Rough sledding.
Rough sledding.
All right, we don't want rough sledding. All right, well, that's it for us for today. Happy trading, everybody. I'm Alix Steel from The Street.
And I'm Scott Redler, T3 Live. Make sure to follow us on the virtual trade floor and in the chat, and if you missed both of those, take a look at the recap. We go over what worked, what didn't work, and we could talk about a little bit what we'll be looking at tomorrow.